Hi, Northern Colorado. I'm Rob Proctor with At Home Real Estate Company. While working with buyers, I find that a lot of them don't understand the loan application process when they're trying to find a home. So I'm here with Chris Coley with,
Hello.
He's a mortgage loan officer with Elevations Credit Union here. And welcome, Chris.
Thank you. Glad to be here.
Are you ready for some common questions from some of my home buyers?
Let's do it.
Okay, let's get started. I have a buyer who needs mortgage loan to purchase a new home. And when should they start the process?
I think they should start right away, even before they're out looking at a home or even looking online for a home. That way they're going to be able to determine what they can afford, how much they're going to have to put down, and most importantly, if that mortgage payment fits within their monthly budget.
That's good information. What's the difference between pre-qualification, pre-approval, and approval?
Great question, Rob. Pre-qualification is basically a buyer talking to a lender and saying, here's what my income is, here's what my monthly debt is, and the lender doing some hand calculations and saying, sure, you can qualify for a $500,000 home. A pre-approval is actually that lender reviewing the income documentation, the asset documentation, and pulling a credit report, making sure that they can qualify for that home. A loan approval is having an underwriter review all that documentation.
Wow, that's some good information because it's always, a lot of people don't understand that.
Right.
So the question that just popped into my mind is, do we have to have a house picked out or be under contract in order to get approval?
Absolutely not. I think it's so imperative for a buyer to be pre-approved prior to even considering a home. That way, once again, they can make sure that that home is going to fit into their family budget. Because you got other things to consider, the property taxes, the homeowner's insurance, if there are any HOA dues, and if it's in a metro district, which could really affect the property taxes.
Oh yeah, it does. It affects them a lot. Does a lender have to pull a credit report to issue pre-approval?
Absolutely. The credit report is going to tell the lender not only what their monthly obligations are, but their credit history and their credit score. Credit score is one of the most important factors in determining if a buyer can be pre-approved.
Wow, okay. So if a buyer goes out and purchases some stuff on their credit card after they've gotten pre-approval, how does that affect them?
That could greatly affect their qualification, depending on what their debt to income ratio is and their credit scores beginning. If a credit refresh needs to be pulled prior to closing and the lender sees they've purchased $5,000 worth of furniture and have a $250 a month payment, that could really affect their approval.
Be sad if they do that, then they can't get their house.
That's right. That's right. I always tell my buyers the $500 rule. If you're going to go out and purchase something more than $500, give me a call first to determine if that's going to affect your approval.
Okay, good. Well, hey, Chris, it's great information for my buyers, but we're not done yet, Chris.
Uh-oh.
Yeah, we're going to get together again, and we're going to do a part 2, continue the loan application process, and eventually get us to closing.
Sounds great.
Yeah.
Look forward to it, Rob.
Yeah, so also I've included Chris's contact information below, along with mine as well. And feel free to give him a call, and if you got some other specific questions that you might write. So we'll see you next time.
See ya.